Hi everyone, and welcome to the channel again. Hopefully you watched a previous video. If not, just a quick summary. So I'm Jim, I'm 62 years old and I'm nearing retirement. So I've only got about 3 years, and all of a sudden I've thought about all kinds of things. What do I need to do? How am I going to get there? So in this video, we're going to talk about the stock market. And should you worry about the stock market on its fluctuations? Should you be trying to make a different move? Now, I'm sure if you have a financial advisor like we do, I'm sure they tell you, just hold on, let it be, it'll all be okay. And that might be fine, but you want to see that it's going to be okay. So, what I'm going to do is show you a few graphs of the stock market and how it's done in the last few years. And this comes from a bit of knowledge I have. I have been messing around in the stock market. There was a time about 3, 4 years ago that I actually dabbled in day trading. I took a few courses on how to read different various charts and lines and averages and the whole 9 yards. So I really got a knowledge for how things kind of work and what you can kind of expect. So for this, I'm going to kind of show you a little bit about what do you want to do when all of a sudden the stock market begins to go way down and you begin to get a little antsy. Oh, I got to do something right now. This market's really down. So in some cases, you might need to do something, and I'll kind of show you an example of that. In the other cases, you're like, no, let's stand pat, and I'll show you why. So you actually can see it in an actual stock chart, so you can kind of see. And I'll be using one specific stock, and then I'll be looking at the not the Nasdaq. I'll be looking at the Dow. Nasdaq kind of follows the Dow as well, so there's not a whole lot difference there. But the Dow seems to be the biggest one that people look at to see how is the market doing. So I do have a tool that I use. It's called Webull. It's a trading tool to trade. It's a tool I used when I was trading, and I've just kept it up. I don't do trading much anymore. Occasional, but nothing big. I'm not really doing much with it. But I know this tool pretty well, so I'm going to kind of use that tool to kind of show you some graphs so we can kind of get a better understanding of where we are. So let me jump over to that tool and we'll go from there. Okay, so here is my Webull application and the stock. So my first example I'm going to show you is maybe a specific stock symbol that when things begin to go a little awry, maybe you might want to look at doing something. And this is actually one of my examples. So this is actually Walt Disney stock. And as I said in my previous video, we are big Disney fans. And during the time, if you look at here, down here towards the bottom down here, whoops, you see the date down there. So this big drop here, so in the stock market, they call this a pullback. But in this drop in this stock price, it was around the pandemic time. So it's around March of 2020. And everything kind of dropped at that point in time. But just like everything else in the stock market, it began to rally and come back. And I actually bought some stock in here when it began to come back. I thought it would be a good buy. And it did. It went from about 120 or so, 125. I think I bought in at 121. If you look over here, you'll see as I move my mouse, it shows the price where my mouse is at. So it's kind of a crosshair. Um, so if you look at, like, I bought it around 121, yeah, somewhere around here, and it went up, and I was holding on to it, and it was going to be a long-term buy. I was going to hold on to it for a while, and it got up to 196. That's the highest price it had hit, and then it began to do some pullbacks, and pullbacks and it dropped pretty drastically. I still was holding my stock, but you can see it was down in the $80 and $90 range, and I had bought it at 121. So I actually held it for a while until it came back a little bit, and I just about broke even. I finally sold it out. So what you can see here, though, on this stock is it did have a rally, it did come back down, and now pretty much for the last almost 3, 4 years, it's just been kind of stale. It hasn't really gone up or down. It's just kind of doing, we call this consolidation in the stock market. So it basically consolidating down. It didn't have a lot of big jumps or big drops. It had some, but it's pretty much sticking around, this low area. So this is a stock that, if it has a history of doing this, so if you look at before the pandemic, it was a good long while where it was doing the same thing. It was just kind of running along a little bit. It wasn't doing a lot. And then just before the pandemic and just after the pandemic, it seemed to have a rally, but then it dropped right back down and it's just kind of sticking around this price range. So this may not be a real good stock to kind of jump into or to retain when something like this happens. But this is something you've got to manage. It's a single stock. It's not a fund. That a fund, which is what you're primarily your long-term investments, your IRAs and things like that, are all going to be in some kind of fund. That's a big consolidation of a bunch of stocks that a fund is managing, and they're ones watching this. So in a fund type situation, you probably are not going to be able to look at that. But I'll give you an example of what to look at if you have funds. But if you have specific stocks you have invested in, this is something to watch for. If it's not growing and it's just kind of staying where it has been, well, and your intent is to keep it long term for growth, well, this is probably not the one to be in at the moment. So with this, let's now jump over and take a look at the same graph, but let's look at the Dow Jones uh, overall stock market and what it's done. Okay, so this is the Dow Jones Industrial Average. So like I was saying, this is more of an overall average of the stock market. And there's a lot of details behind exactly how they come up with this. I'm not going to go into that here. It's just to kind of give you a view of how things work. So this is the same timetable that I was using on the Disney stock. So here is the pandemic, and the Dow Jones, just like the Disney stock, dropped. Everything pretty much dropped in the stock market during the pandemic. But you can see how, again, it quickly recovered. And unlike the Disney stock, it's continued to go up and up and up. It's definitely on the upward scale. This green line down here is called the moving average. And it takes in, you can configure this however you like. I forget how much I have, but it will take in a history of so many points of sale and average it out. And then it gives you this line that kind of makes it a clean line. You don't have this big jerky up and down. Well, you can even see the moving average is on this direct line going up. It's just always going up. So when you have one of these pullbacks, and again, I'm not a full expert. Could the bottom drop out of this thing and go all the way back down? I'm sure it could. I'm just going off of what I see for the last few years, 5 years here, in what it's telling me. And what it's telling me is when you have one of these pullbacks, you don't need to worry about it. It's going to recover, and it's going to have a pullback, and it's going to recover. But again, I'm not an expert. Like I said, I want to emphasize that this is just based off of data, historical data. Could something happen tomorrow that's going to drop this thing all the way back down? Absolutely. Something could happen. I think the odds of that are very low. But let me just kind of show you one other thing is going all the way back to like 1990. So over here is 1990 and going all the way to present day. So this, again, this moving average line is always going up, even through all of these different pullback times when the stock market's on its way down. And during this time, people might be thinking, oh, it's never going to come back. It's never going to come back. Well, it does. And it usually comes back with a vengeance. So it's just for me, this is for me. I mean, you could be different, you might be different, but for me, when there's a pullback, even a significant pullback, I don't worry about it. It's just I don't think it's worth worrying. The odds of it dropping really dramatically, I think, is very, very low. In fact, the way I look at it is when we do have a big pullback, it's time to buy some stock because it's on sale. You're going to get it for a cheaper price. And that's always a good thing, right? So that's kind of how I look at it. Um, but I just kind of show you that, the overall history of the stock market shows it's never going to go, way back to how it was at the beginning. I mean, back here, it was like $3,000 a stock back in 1993, and today it's $53,000, right? This is just the nature of the stock market, right? So that's just a little bit about the Dow and how it is showing a history again going back to 1993 or even back further, how it's always on an incline, it's always going up. Yes, there's some rocky times. Yes, it has a pullback, but it always recovers. Sometimes it takes a little bit longer to recover. Sometimes it might take years to recover. But I don't think it's going to be many years. I think some of these were pretty quick. You're talking months for some of these recoveries. So just keep that in mind, as you start seeing things. If there's another big pullback, yeah, you should pay attention to it. Yeah, you want to watch it, but the history here says it's going to recover. So that's it for this video. It's pretty quick and dirty. Just kind of go into a little bit about the stock market, some things that I'm watching, my wife and I are watching. My wife sometimes gets a little worried about it, but I don't, not really. I mean, we both kind of know that stock market's going to rebound. There's always a possibility of something, so we're kind of watching it, but it always rebounds. So, but if you're worried about it and it bothers you, get in touch with your financial advisor and just, work through it with them and see what they tell you. They're probably going to tell you the same thing. Just kind of hold tight. But also, if you have some individual stocks in your own, maybe you want to watch those a little bit more closely. Like, for me, it was Disney. So, and see if you want to stay in those things long term. But I wouldn't make a knee-jerk reaction on a pullback when the stock market goes down. I would kind of watch it and see if it rebounds. You're most likely going to rebound to some level like Disney did, but then it just kind of leveled out, and that's when we decided we're going to go ahead and sell and get out. And we broke even pretty much on that stock, but we did have it for quite a number of years actually, kind of getting it back to where it needed to be. So with that, that's it for this video. If you got anything out of it, if you enjoyed it in any way, please give me a thumbs up and don't forget to subscribe down below. And I hope to see you in the next video.